it has been the most challenging first half of the year, Brian, I have ever seen. Just utterly absurd. And the stock market's really given us a V, yet the real economy seems to be in a sloppy U or a W pattern. So I think expert traders and long-term traders are really baffled by this huge crowd of stay-at-home traders, day traders, and the impact they've had on this market. We're going to be underweight equities going into the second half of the year, but not substantially, because that rise in May and June, or April, May, and June really hurt if you were underweight. It really caused people to underperform.
Do you really believe that the Robin Hooders, the day traders of the world, that they're able to move the market around?
It's hard to believe, but when you think about the fact that there are millions of financial advisors, equity traders, analysts, and then on top of that, the fact that all the people that like to bet on sports and bet on casinos can't, it's got to have some effect. And I know it sounds crazy that they could have that powerful an impact, but there's no way I can explain the unusual moves of this market. It's not following traditional moving averages. So most of the technical patterns are just blowing out of the water. And I hear long-term experts like Art Cashin, people you guys have talked to for years, who are just baffled by the strength of the underlying strength of this market, given the economic figures. The Fed is probably the only explanation of don't fight the Fed and that money is cheap. But it is really remarkable how stocks have traded near back to all-time highs in an economy that is 2/3 of where it was a year ago at this time.
Yeah, I don't want to date myself, but I was doing this job at the NASDAQ back in 1999, and I remember kind of a similar time. I'm certainly not saying there's some sort of imminent collapse coming. That's your job, by the way, not mine. But I do remember the idea that, as long as you traded something and find someone else to sell it to, it didn't matter how you turned out. I mean, a lot of these day traders, they've been right. I mean, they've done well. They've made money on stocks that some of them should probably be at zero, but continue to move up even after bankruptcy. How do you think this ends? Do you think it will be a 2000-like collapse, or do you think because market structure in the Fed, we're going to kind of ease our way out of it?
Well, I hope it's not a 2000 collapse. There's part of me that feels like I'm out on a ledge and the ground underneath us is a little fragile. So I'm worried about that. But, the way it ends, this was a health crisis at the start. It's going to end when we have some kind of a viable vaccine. I mean, there are 12 vaccines in human trials right now. One of those 12 is going to work, and then it's going to go into mass production. So I'm hoping that maybe by Thanksgiving time, toward the end of the year, we finally turn the corner. But even then, you've still got millions of Americans unemployed. They're going to go back to work slowly. I don't know that consumers going to, people have been financially hurt. The $600 a month extra money has got to run out. And that puts a huge deficit in the USA. So there's going to be pain to pay for this. And then, oh, by the way, by the time we get into the fall, there's a giant election. And it's going to be sloppy. I'm worried it's going to be a bad voting situation and turnout questions. And for the first time, we may have a strongly, well, not the first time. Remember the Bush
hanging
Gore
Chad
election, a really contested election with questions. And that's not going to be good for the equity markets. So I think we had a long road to hoe, and the end is going to be sloppy.
Sounds like you're going to reduce your equity exposure. Chris, you guys are a super tanker. You're huge. You move slow. I get that. But it sounds like you're going to either keep your stock exposure the same or maybe bring it down a little over time in the quarters?
Well, within our ranges, we're allowed to shift that portfolio slightly, especially when we see rough seas ahead like this environment. We're going to continue to invest in real estate and in private equity, but I got to tell you, that's going very slowly. There's not a lot of opportunities in those areas. So we'll be slightly underweight and more defensive in our equity. We're going to stay high in our cash position because of all the uncertainty that's out there. But it's too tough of a market to take a big bet away. I would recommend everybody to revisit their own retirement accounts. June 30 is a great time to rebalance. And I always recommend, get a glass of a very nice red wine and sit back and take your time to look at your overall age and your risk and rebalance your asset allocation. But boy, don't try and time this market. Leave that to the day traders, which right now is an occupation, but that too will go away.